Energy markets across the world, especially those dealing with oil, gas, and coal, are highly sensitive to global events, particularly during times of conflict or crisis. When war, political instability, sanctions, or pandemics hit, they can disrupt supply chains, damage infrastructure, and cause prices to fluctuate widely. For example, if a major oil producing country like Iran becomes involved in a wider conflict, it could threaten neighboring nations' ability to supply oil, triggering fears in global market. Key energy assets like oil wells, pipelines, and shipping routes are vulnerable during such times. One historic case was during the 1990 Gulf War when Iraq set Kuwait oil wells on fire, leading to months of lost supply and massive environmental damage. Even temporary blockages in major trade routes like the Strait of Hormuz or the Suez Canal cause serious transportation delays. On the other hand, demand can rise or fall sharply. During wars, fuel usages by militaries surges during the COVID-19 pandemic. It plummeted as economies shut down. These shifts in supply and demand cause oil prices to rise, fall, and swing frequently, creating a roller coaster of volatility in the global energy market. The instability is made worse by geopolitical tensions and speculation. Much of the world's oil and gas comes from politically unstable regions like the Middle East, where even a rumor of conflict or sanctions can send price skyrocketing. Sanctions against major producers like Iran, Russia, or Venezuela often affect investment decisions and trade flows. Traders, reacting not just to reality but also to forecast and fear, often drive prices up or down long before any real change happens. A recent example is from June 2025 when the Iranian parliament authorized the possible closure of the Strait of Hormuz. Even though oil was still flowing normally, prices surged immediately. The next day, a missile strike on Qatar triggered a price drop, but because markets perceived it as a sign of de-escalation. Financial speculation and algorithm-based trading add further chaos. Even renewable energy isn't free from impact. Supply chains for solar panels and wind turbines can get disrupted, and demand still depends on global economic conditions. In short, energy markets are deeply tied to world events, and staying informed is essential for governments, investors, and consumers to manage risk and plan ahead.